Are we live? Yeah. Hello, guys. Hi, everyone. Good morning, good afternoon, good evening. Here in Melbourne, it's time to sleep. Here it's morning, so good morning and good night. So, welcome back to my stream. Here we are again, doing the same thing again. So, we're back. Give me one sec. I'll play some background music.
This is a secret tip from sex workers. Take the yellow pill.
So, yeah, sorry, guys. I was setting my. It's too loud. Just give me one sec. Alright, hope everything is fine now. So, good morning, guys. So, like every day, we're back again trading gold. So, I've already made my levels, but for you guys, I'm gonna make my levels once again. So, daily is not moving anywhere, so it's like stopped. So, it's in the range. So, our daily high is around 19, and daily low is 1912. So let's go to 4-hour chart. If you can see, yep. So for 4 hours, so this is our 4-hour resistance, and this is gonna be a 4-hour support. Let's go to 1-hour chart. So yep, 1 hour we have a support over here and resistance over here. So 30 minutes. So yeah, basically, and 15 minutes. So basically, as you can see, the price is ranging between these two levels. So that's 1922 and 1913. The price has been ranging between these two levels since yesterday. So do we have anything on the left? Let's look at what. So yeah, price has been in the range yesterday between these two levels. So what our today's plan is, let price comes to either support or resistance, then we're gonna take our trade by looking at the candles. So if for now, what my plan is, if the price comes towards 1912, we're gonna take a buy. If it comes towards 1921, we're gonna take a sell. But before just taking sales, we're gonna have a look at the price actions of the candles. Let's see how it prints the chart, and then we can take our buys and sells. So yeah, for now, just a waiting game. And today is Friday. Is there any? Okay, so there's news as well. Okay, give me one second. Let's say okay, but 10:05. So that's like in 1.5 hour, in 1 hour 11 minutes. The Fed chair's gonna speak, so maybe that's why the price is ranging, because there's every time the chairman Powell, the Fed chair speaks, the market moves, so it directly affects the price of gold. So maybe that's why the price is in range. So all we can do is we just have to wait, and that's it. And as I've already told you guys, one of the most important thing about trading is waiting. Trading is a waiting game. All right, just have to wait until the right opportunity comes, and we have just have to take the right opportunity. It's not about taking every opportunity; it's about taking the right opportunity. So let's see how it goes. So yeah, let's see what our Mr. Don is saying.
Can we play a Snapple? I mean a Wordle?
Snapple? That
Or a
drink.
Uh,
Wordle?
No.
Let's play a Wordle.
Nah, we got runners here. I'm gonna do something real quick.
guys on trade.
What was that target right there?
Huh?
What was that
I'm gonna do
target?
something real quick. I finally get to do it. After studying on Instagram and people's entries all day long, finally, it's my time to shine.
Are you gonna post an ICT chat or something?
Nah, it's my time to shine. Jeez, this is what they be doing, right, chat? Something like this. They cover a lot size up, and they be like, "Hold on." They be like, "Hold on. We gotta remove all the trading history
Nah,
stuff."
you gotta get the smiley face with the horns.
Nothing going and this guy's on trade. So now our plan is to let the market comes to this level, grab the liquidity, and we're gonna take a buy to go up. So what I've learned in the past few weeks is that in order to move the market, it needs to grab a liquidity. So in order to go up and break this razor, it has to come down, grab all the liquidity, grab all the volume, and go up. So yeah, that's what I'm planning. Let's take our stream, guys. How is our stream? So let's stream. Set up. Again. Let's go have a look at a 1 minute chart. Last few days, few weeks, I've been taking a lot of trading 1 minute charts. So. But now I want the price to come down towards 1930, 1912 and take a trade. But let's see.
4 is a pretty humble card, right? Child say for the most part, like, you know, it's not too crazy. But you know, over time, yeah, eventually I want to have super cards, right? But I just gotta take care of some stuff first, and then maybe like, you know, in a couple of years, year or two, or maybe next year, I might get a super card. But probably SVJ or 765 LT. That's it. Lucky to be SVJ. I really want that SVJ. That's my dream.
So yeah, there's nothing happening. Nothing happening. All we can do is wait. So we're 5 minutes away from 1 hour close. So let's wait for this 1 hour to close. So and what we can do is if it close this bearish, you can take a trade and break up this 1 hour low, but I think it's too risky because the stop loss gonna be more than 40 pips. That's like, yeah. Need to put that new to live stream, so I need to put something here around this gap. I need to put something, so there's 45 seconds for the 1 hour close. Yeah, and let's see. So 1 hour is gonna close bearish. So what might happen is like the price gonna come down, and maybe it can break this resistance support over at 1921, because I feel like price came down, right? But it went up, grabbed the liquidity and the volume for the price to come down and reach 1912 and break this high and come back come down to 1905, but you never know.
Left here, it's gonna be around here probably, like 1918. If it's not, then it's gonna be 1919.27. That might be pushing it a little bit, but every time that you drove down, right, like looking at this, and you're looking at this, you tap into here first. So chances of you, really tap into that range is a little high. But once you tap that level and you reject and break the lows, then yeah, you're higher likely to continue down towards 1911. We're just chilling though, chat. Just chill Friday. Just relaxing, Just relaxing. Not much we can ask for more today, right? Didn't have to go to work.
The trading view stuck for you. Actually, you're not gonna see trading view only when he turns it on.
Oh yeah, on Zoom it's on when
I mean, you're not gonna see MT5, and when trading view freezes whenever you switch off of it onto MT5. So
Nothing going on in the market. Nothing to do. Yeah, this is a bad thing about this. Thing is, we need to learn, guys. So trading is all about patience. It's a waiting game, waiting for the right opportunity. I keep telling you that. So there's nothing going on. There's nothing for our setup. So all we can do is wait for the price to reach to that level where we want and take our trade. Otherwise, we're not gonna take a trade because this week it has been a alright, good week. But let's see how. So yeah, this week we have made $1,300 something dollars, so that's like almost 20-30% of my account. So we're still good. So yeah. So yeah, let's see. Today's the last day of the week, so gonna be pretty chill. Wait for our setup. We're gonna be here maybe 1.5 more hours, so we'll see. Oh, I'm sleepy. I didn't sleep this. I'm a bit sleepy and I need to wake up tomorrow at 5 o'clock. Go to work. Shit. I hate to go to work. I want to be a full-time trader. I don't have enough capital to be a full-time trader. Can't survive in Melbourne by just earning $1,000 per week. It's really hard. So yeah. I'm planning to grow this account to the amount where I can just survive by trading full time. So yeah, let's see how it goes till the end of this year. I started with 5k. We're 80k, so we're almost 60% up in 1.5 months. So we'll see till the end of this year. My goal is to finish this account 50k, but in trading you never know. So yeah, it's better not to have a goal. All we can do is try our best. Yeah. Let's see what's the news. Forex 5. So yeah, the price is finally is coming down. So what we want is we want price to come down towards the support area, supply zone around 1912, 1913. Then we're gonna take buy or yeah, we'll see how the price reacts when it comes to this level, and we're gonna make our decision whether we're gonna buy or sell. So yeah, we're just waiting. Nothing other news. So yeah, this on August only we are 4,800 profit. So we have one more week in August. So let's see how much more we can gain. Yeah, today we haven't taken any trades yet. Okay, sorry. Yeah, I'm trying to set up my screen like the other streamers. I don't know how to do this. No idea. Let me see. Others streamers do trading. Dude, like. Oh shit! I'm kind of sleepy already, and I need to wake up tomorrow early morning. Well, I. Jeez, I'm tired of sitting here. Sorry guys, just a waiting game. Nothing's happening. So yeah. Streamers out there. Streaming out there. I'm just looking at overlays for my OBS so that our live streaming looks really good. But yeah, the price is coming down. Yeah. La 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 la. I don't know. Yeah, looking at these guys. Yeah. Yeah. What just happened? I don't know.
Anyone, please comment this exam. एक बचाइहाल्छु कि भनेको
Please recall me. Got it.
गाडी त भने
So yeah, guys. So finally, the price is on the way down. So we need a couple of more pips, and then we'll take our trade in 15-20 minutes. But the thing is, like, we have new Jerome Paul speaking at 10, so that's half an hour. So I don't know what to do. Let's see how. See. have a our trade in a while. Around 1913. So yeah, we're gonna take our trade around 1913, 77, around this area. And it's gonna be a buy. So there's 5 more minutes for the 15 minutes to close. So yeah. We need to take trade around 13, 19, 13, 68, 7. Let's see how this. Alright guys, I'm gonna take a trade here. It's a buy. And our stop loss is gonna be around 1262. That's almost 16 pips. It's 17 pips. So we are anticipating the price. We're anticipating the price to go up because the price is on around our major support area. So the price has been bouncing from this support area for like 1, 2, 3 times. It's gonna be the 4th time. So that's what I think, that price came to this level, grabbed the liquidity, and it's gonna go up like it did yesterday. So yeah, we'll see how it goes. I don't know, maybe we rushed in the trade, but yeah, it has been working for us for the past few months, so we'll see. So we've taken our trade, well, we're just gonna wait. The music is really nice though. Yep, the price is moving up. Price is reacting to around this level because this level has been our supply zone. So yeah, so my guess, there's a high probability that price gonna reverse back and go toward this previous high. So I was sorry, TP is gonna be around 1960. So that's around 550 pips. Once it go around this 1917, once the price moves to around 1917, 24, 1917, we're gonna move our stop loss to break even. And oh shit, what is this? Stop loss to break even, maybe close half and let the runners run. Yep, that's our plan. So yeah, the one thing about trading is, before you take a trade, you need to have a plan in your mind. What you're gonna do if the market doesn't react the way you want. What you're gonna do, your exit plan, your entry plan, your take profits, how you're gonna manage the risk. That's all. So you need to have a plan. It's not just about clicking a button and clicking buy or sell, close position or that. You need to have a plan. What are you gonna do if market does this? What are you gonna do if you have this? So when our plan is that I'm anticipating the price to go up. When it's reached this level of 1917, we're gonna close half and move the stop loss to break even, then yeah, we're gonna let the runners run. Our target is gonna be 1919. Let's have a look. Yeah, 1919, 1920. But yeah, we'll see. It's getting cold, guys. The weather in Melbourne is like the changes so far. The changes. It's like a girl's mood. Like it changes really fast. You know, there's a saying that in Melbourne we have 4 seasons in a day. In the morning it's winter. Around 10 a.m., 11 a.m. is like spring. Around 11, 12 it's really hot, like summer. And sometimes it rains in middle of nowhere, out of nowhere. So yeah. You need to take your jacket wherever you go, take an umbrella or something. Yeah, you need to be prepared. Like in trading, you need to get prepared for the worst. Yeah, it's tough to live here. We're gonna move our stop loss just below the support so that it doesn't touch our stop loss and close the trade. Yeah, I want the price to come down and go. Yep. Yeah, let's see where it goes. We're on drawdown, 20 pips, 30 pips. But I still believe there's a high probability that market can reverse back, reverse to the previous high level. So that says around 1919. Oh, yeah, it's all about the news is saying it's all about power speeds. What he's gonna say, so it all depends on his speech, how the market gonna react. So yeah, I believe I might close the trade before the news because it's really unpredictable. News is really unpredictable. You never know where's the market going. Yeah, I've lost a lot of money by trading during news. Because of FOMO, I used to have FOMO. Oh, the market moved a lot, like 200 pips, 250 pips, and I was like, oh, I'm gonna miss this trade. That I took a random trade and I lose a lot of money. But now I'm trying to make myself disciplined enough so that I don't take such foolish trade, like trading during the news, just trading out of FOMO. And that's what I'm trying to control. Yep. we're going up. We're at 70, 80 pips profit and profit. So we go like our. Let's set our TP1. Our TP1 gonna be around this first. Yep. We're 12 pips profit. We're gonna close half around 9 and 16. Then let the runners run. So yeah, we're gonna move our stop loss to previous low, 1913. Because what I believe is if the market's gonna go up, it should not come down and break its own low. I think there's not enough volume in the market because everyone is waiting for the news. So yeah, they're just waiting. So that's why the gold is not moving that much. Waiting for Paul's speech. Still, as I'm anticipating to get the price to go up. 1919, at least 1919. Look at the 5-year candle. 5-minute candle. So the 5-minute candle close. Open straight came down, so it means that it's gonna go up and fill this week. Yeah, so it's gonna go up. Yep. Yeah, let's wait for the next 5-minute candle. Look at how it closed. Let's see what these guys are laughing about.
A better idea of the charts too, right?
Yeah, true. Yeah, I feel like as well. Like back in the day, I remember we used to literally get like wicked out, and then it would come back our direction. Whereas now sometimes, if we can like break the lows or the highs one more time.
So the price is trying to form a support around this area. Because there has been a lot of a lot of supply zones, a lot of yeah. So yeah, trying to form a support. So yeah, we still believe it's gonna go up. Right. Mm. Can do is I'm going to stop loss to this area. If the price, so what I'm gonna do, if the price come towards this level, the previous 1 minute low, the 1930, 1350, I'm gonna take another buy, another position. Because you know, if it's the market wanted to come down, it would have come down already, right? Because it means that there's not enough volume in the market. Down. It just is waiting for the volume. So the 5-minute candle close to bearish candle. I'm gonna take another buy here. We haven't had a losing day in a while. We are risking around $700. So yeah, for the market to go up, this 15 minutes candle was much closer dozy or slightly bullish. So yeah, we still get 1 more minute. So yeah, we'll say I need this candle to close, this 15-minute candle to close a doji, a little bit, yeah, bullish doji, and it'll close around this area 1940, but I don't think it's gonna close. So Mm. So guys, so what might do is just before 10 a.m. Eastern time, I gonna close all my positions because of the news. Mm. Oh yeah, today I didn't went to gym as well. Shit, I was so lazy today. So this 15 minutes candle closed bearish. So I think is but it's gonna go down a little bit more. Yep. So as you can see, there's no bottom wick on this 15 minutes candle, so it might come down. There's a possibility it might come down because for the candle to go up, it needs to come down. So yeah, so I'm gonna let the trade go on until the end of this 15-minute candle, and then after that I'm gonna close. Whether I'm in profit or loss, I'm gonna close everything because of the news, because I don't want to trade in news, it's too risky. So for this, for the price to go up, I want the 5-minute candle to close bullish, so that there's a momentum for the price to go up. So the price is failing to break the previous highs. It's trying to make lower low, lower low, lower highs, lower low, lower highs. So it's trying to come down. But yeah, I want the price to break this high. So what you can do, if the price break this high, what happens is like it's gonna be a higher low and higher high. So I want to break this high, close above this high, go turn this position. That's gonna be like higher low. So higher, so this low failed to break the previous low, right? This gonna be higher low, I need a higher high and come back higher low, high high. Yep. So that's our analysis. So yeah, the price broke this high. So it's trying to make a high low, high high. So yeah, so the 5 minute candle's gonna close bullish. It's closing in 15 seconds, so it's gonna close bullish. So that means that we have the candle is showing us the direction that it's gonna flip. It's gonna flip up. It's gonna do a reversal. So yep, I think we're in a good trade. So let's solve this. So the 1 minute is trying to make higher lows, higher high, and 5 minute is bullish. I want the 15 minutes to close bullish as well. So 15 minutes bullish, 30 minutes bullish. 1 hour is still bearish, but yeah, let's see. What can these wait? So we're now, I'm gonna move this stop loss. So we're now risking around $350. So around what? How many pips? 10 pips, and so around 20 pips. Yeah, for the price to go up, the price must come down first and go up, make a lower wick and go up. So that's what the price is doing. It broke the high, now it's coming down. Now it's come down to a certain level, like to our first entry, then break this previous high, break the previous 5 minute candle high, and move up. That's what the price should do in order to move up. Yep. So guys, the market, the price is making high low, high high. So the previous low was here, now the other, then it made a higher high, then higher low. Now it's trying, it made another higher low. Now it's gonna break, it already broke this previous higher high, so it's gonna make higher high over on this position, and yeah. So we're gonna move move the stop loss to the second entry break even. Yeah. So I'm gonna Mhm. So we're gonna move the stop loss to first entry break even. So it's gonna be our VIX fee trade. So guys, I'm gonna close our trade here. So the reason I close the trade is like in 5-10 minutes there's this news, and it's a strong news. The Fed chair Jerome Powell is speaking, so that's gonna impact the price of gold. And the other reason is that there is this previous resistance on 1 minute candle, but it is what it is, guys. And we might have gotten more profit, but it is what it is. The another thing about trading is don't be too much greedy. You need to control your greed. Here we have how many pips? 20, 21 pips and 15 pips, so 35 pips. So that's enough. That's a lot. So yeah, for now let's wait 10 more minutes for the chair Jerome Powell to speak, then and we'll see how it goes. Jerome Powell to speak, and see how it goes. Price to go up, the price must come down first and go make a lower wick and go up. That's what the price is doing. It broke the high, now it's coming down. Now it's come down to a certain level, like to our first entry, and break this previous high, break previous 5-minute candle high, move up. That's what the price should in order to move up. That's what the price should. Yeah, you can see the price is moving up. It broke the this previous area with it reversed, so I believe the price gonna go up and hit our initial take profits around 1990. But yeah, let's see. We got 7 more minutes for news. Yeah, 7. So we have Jackson Hole Symposium. What is the Jackson Hole Symposium? We have 6 more minutes for the news. I'm really sleepy. I need to sleep now. Oh, guys, I'm gonna sleep in in half an hour. See, every market is waiting for the Powell's speech. Euro waits for Fed's fall, oil sideways, USD JPY to suffer. Ta-da. Revised 100%. Ready to sleep now. So 5 more minutes for Jerome Powell's speech, Federal Chairman's speech. So that's what I'm talking about on the news. So it's really unpredictable. The price can go anywhere. The hazy went up and straight came down. So yeah, instead of taking I don't want to take that risk because I've lost a lot of money doing that. So what these days what I usually do doing is I don't trade the first 15 minutes of the news. I want the market to settle down and source where it's moving in the 15 to 30 minutes. Okay, during that 15-30 minutes the market settles down. It absorbs the news and decides where to move, either it's gonna go up, go down, or it's gonna go up sideways. So yeah, that's what I'm gonna do now as well. See, that's what I'm talking about, guys. That's what I'm talking about news. It's really, really predictable. Get it choppy. Really, yeah.
We improved. Oh, so okay, TP would have hit then. So here throughout the last couple of years to really understand it. What is this? TP hit. Okay, TP hit and then played out for what? What was the TP again? Oh wow, TP and just smacked. Yeah, so see. Wow. So it would have been 0.4, right? It would have been 77. So not much of a difference really. 7. So now you broke the lows, chat, right? Now you actually grab liquidity on the 4-hour time frame.
Betsy, and good
now,
morning,
if it were to
everyone.
drive up, it would drive it from here.
At last year's Jackson Hole Symposium, I delivered a brief, direct message.
Yeah.
My remarks this year will be a bit longer, but the message is the same. It is the Fed's job to bring inflation down to our 2% goal, and we will do so. We have tightened policy significantly over the past year. Although inflation has moved down from its peak, a welcome development, it remains too high. We are prepared to raise rates further if appropriate and intend to hold policy at a restrictive level until we are confident that inflation is moving sustainably down toward our objective.
Maybe, I don't know. I didn't see how fast quick it flipped, but it was pretty quick.
Today, I will review our progress so far and discuss the outlook and the uncertainties we face as we pursue our dual mandate goals. I will conclude with a summary of what this means for policy. Given how far we have come, at upcoming meetings, we are in a position to proceed carefully as we assess the incoming data and the evolving outlook and risks. The ongoing episode of high inflation initially emerged from a collision between very strong demand and pandemic-constrained supply. By the time the FOMC raised the policy rate in March 2022, it was clear that bringing down inflation would depend on both the unwinding of the unprecedented pandemic-related demand and supply distortions and on our tightening of monetary policy, which would slow the growth of aggregate demand, allowing supply time to catch up. While these two forces are now working together to bring down inflation, the process still has a long way to go, even with the more favorable recent readings. On a 12-month basis, U.S. total or headline PCE inflation peaked at 7% in June 2022 and declined to 3.3% as of July, following a trajectory roughly in line with global trends. The effects of Russia's war against Ukraine have been a primary driver of the changes in headline inflation around the world since early 2022. Headline inflation is what households and businesses experience most directly, so this decline is very good news. But food and energy prices are influenced by global factors that remain volatile and can provide a misleading signal of where inflation is headed. And in my remaining comments, I will focus on core PCE inflation, which omits the food and energy components. On a 12-month basis, core PCE inflation peaked at 5.4% in February 2022 and declined gradually to 4.3% in July. The lower monthly readings for core inflation in June and July were welcome. But 2 months of good data are only the beginning of what it will take to build confidence that inflation is moving down sustainably toward our goal. We can't yet know the extent to which
he's still
these
telling
lower
us
readings will
that
continue,
inflation is still
or
high.
where
So
underlying inflation will
they're
settle
ready to
over coming
raise.
quarters.
They're prepared to raise
12-month core
rates.
inflation is still elevated, and there is substantial further ground to cover to get back to price stability.
What I want now is the price
To
to
understand
come
the factors that
down
will likely
around this
drive
level, and
further
I'm going to take
progress,
a bath.
it is useful to separately examine the three
We'll see.
broad
It's not
components
here.
of core PCE inflation: inflation for goods, for housing services, and for all other services, sometimes referred to as non-housing services. Core goods inflation has fallen sharply, particularly for durable goods, as both tighter monetary policy and the slow unwinding of supply and demand dislocations are bringing it down. The motor vehicle sector provides a good illustration. Earlier in the pandemic, demand for vehicles rose sharply, supported by low interest rates, fiscal transfers, curtailed spending on in-person services, and shifts in preference away from using public transportation and from living in cities. But because of a shortage of semiconductors, vehicle supply actually fell. Vehicle prices spiked, and a large pool of pent-up demand emerged. As the pandemic and its effects have waned, production and inventories have grown and supply has improved. At the same time, higher interest rates have weighed on demand. Interest rates on auto loans have nearly doubled since early last year, and customers report feeling the effect of higher rates on affordability. On net, motor vehicle inflation has declined sharply because of the combined effects of these supply and demand factors. Similar dynamics are playing out for core goods inflation overall. As they do, the effects of monetary restraint should show through more fully over time. Core goods prices fell the last 2 months, but on a 12-month basis, core goods inflation remains well above its pre-pandemic level. Sustained progress is needed, and restrictive monetary policy is called for to achieve that progress. In the highly interest-sensitive housing sector, the effects of monetary policy became apparent soon after liftoff. Mortgage rates doubled over the course of 2022, causing housing starts and sales to fall and house price growth to plummet. Growth in market rents soon peaked and then steadily declined. Measured housing services inflation lagged these changes, as is typical, but has recently begun to fall. This inflation metric reflects rents paid by all tenants, as well as estimates of the equivalent rents that could be earned from homes that are owner-occupied. Because leases turn over slowly, it takes time for a decline in market rent growth to work its way into the overall inflation measure. The market rent slowdown has only recently begun to show through to that measure. The slowing growth in rents for new leases over roughly the past year can be thought of as in the pipeline and will affect measured housing services inflation over the coming year. Going forward, if market rent growth settles near pre-pandemic levels, housing services inflation should decline toward its pre-pandemic level as well, and we will continue to watch the market rent data closely for a signal of the upside and downside risks to housing services inflation. The final category, non-housing services, accounts for over half of the core PCE index and includes a broad range of services, such as healthcare, food services, transportation, and accommodations. 12-month inflation in this sector has moved sideways since liftoff. Inflation measured over the past 3 and 6 months has declined, however, which is encouraging. Part of the reason for the modest decline of non-housing services inflation so far is that many of these services were less affected by global supply chain bottlenecks and are generally thought to be less interest sensitive than other sectors, such as housing or durable goods. Production of these services is also relatively labor intensive, and the labor market remains tight. Given the size of this sector, some further progress here will be essential in restoring price stability. Over time, restrictive monetary policy will help bring aggregate supply and demand back into better balance, reducing inflationary pressures in this key sector. Turning then to the outlook, although further unwinding of pandemic-related distortions should continue to put some downward pressure on inflation, restrictive monetary policy will likely play an increasingly important role. Getting inflation sustainably back down to 2% is expected to require a period of below-trend economic growth, as well as some softening in labor market conditions. Restrictive monetary policy has tightened financial conditions, supporting the expectation of below-trend growth. Since last year's symposium, the 2-year real yield is up about 250 basis points, and longer-term real yields are higher as well by nearly 150 basis points. Beyond changes in interest rates, bank lending standards have tightened and loan growth has slowed sharply. Such a tightening of broad financial conditions typically contributes to a slowing in the growth of economic activity, and there is evidence of that in this cycle as well. For example, growth in industrial production has slowed, and the amount spent on residential investment has declined in each of the past 5 quarters. But we are attentive to signs that the economy may not be cooling as expected. So far this year, GDP growth has come in above expectations and above its longer-run trend, and recent readings on consumer spending have been especially robust. In addition, after decelerating sharply over the past 18 months, the housing sector is showing signs of picking back up. Additional evidence of persistently above-trend growth could put further progress on inflation at risk and could warrant further tightening of monetary policy. The rebalancing of the labor market has continued over the past year but remains incomplete. Labor supply has improved, driven by stronger participation among workers aged 25 to 54,
Hi guys, I think
and
I'm
by
gonna
an
sleep
increase
now
in
because we
immigration
have a trade
back
for
toward
today.
pre-pandemic levels. Indeed,
Yeah, sorry. I think I'm gonna sleep now because we have a trade for today. We got 15 and 25% profit, so that's $385. So that's more than enough for today. Today's Friday, so we have a trade. Let's just chill. I wanna sleep because I got work tomorrow morning, so I'm still working, guys. So yeah. I'll just wait till 10:30, 12:30. So yeah, 15 more
Range
minutes,
of
and I'm gonna
measures
head
continues
off.
to slow, albeit gradually. While nominal wage growth must ultimately slow to a rate that is consistent with 2% inflation, what matters for households is real wage growth. Even as nominal wage growth has slowed, real wage growth has been increasing as inflation has fallen. We expect this labor market rebalancing to continue. Evidence that the tightness in the labor market is no longer easing could also call for a monetary policy response. Turning to the path forward. 2% is and will remain our inflation target. We are committed to achieving and sustaining a stance of monetary policy that is
So
sufficiently
yeah, they're still
restrictive
saying that they're
to
gonna
bring
increase
inflation down to that
interest
level
rate,
over time.
so that
It is challenging, of course, to know
inflation
in
is at
real time
2%.
when such a stance has been achieved. There are some challenges that are common to all tightening cycles. For example, real interest rates are now positive and well above mainstream estimates of the neutral policy rate. We see the current stance of policy as restrictive, putting downward pressure on economic activity, hiring, and inflation. But we cannot identify with certainty the neutral rate of interest, and thus there is always uncertainty about the precise level of monetary policy restraint. That assessment is further complicated by uncertainty about the duration of the lags with which monetary tightening affects economic activity and especially inflation. Since the symposium a year ago, the committee has raised the policy rate by 300 basis points, including 100 basis points over the past 7 months. And we have substantially reduced the size of our securities holdings. The wide range of estimates of these lags suggests that there may be significant further drag in the pipeline. Beyond these traditional sources of policy uncertainty, the supply and demand dislocations unique to this cycle raise further complications through their effects on inflation and labor market dynamics. For example, so far, job openings have declined substantially without increasing unemployment, a highly welcome but historically unusual result that appears to reflect large excess demand for labor. In addition, there is evidence that inflation has become more responsive to labor market tightness than
when there's nothing holding you back. What would your thing be?
Update your stir fry to plant-based. Use V2 means to make shoes mouth-watering Asian stir fry, packed with protein and fiber. Join us today and update your plate with V2 food.
Could allow above target inflation to become entrenched and ultimately require monetary policy to wring more persistent inflation from the economy at a high cost to employment. Doing too much could also do unnecessary harm to the economy. As is often the case, we are navigating by the stars under cloudy skies. In such circumstances, risk management considerations are critical. At upcoming meetings, we will assess our progress based on the totality of the data and the evolving outlook and risks. Based on this assessment, we will proceed carefully as we decide whether to tighten further or instead to hold the policy rate constant and await further data. Restoring price stability is essential to achieving both sides of our dual mandate. We will need price stability to achieve a sustained period of strong labor market conditions that benefit all. And we will keep at it until the job is done. Thank you.
Good.
Thank you, Betsy, and good morning, everyone. At last year's Jackson Hole Symposium, I delivered a brief, direct message. My remarks this year will be a bit longer, but...
No, the word prematurely was not used. That's a big deal. I actually like that a lot. Okay, good. So let's add that to the bingo card that he didn't mention. Warning against prematurely loosening. He did not invoke Paul Volcker, didn't invoke Greenspan, didn't invoke fate, didn't tell us about unemployment potentially being what level would be unacceptable to them. We didn't get that. So there's some things we didn't really get here.
इतने बड़े वॉलेटिलिटी में
हाँ जी 10 से ज़्यादा बनता है। बैल चले 1 मिनट की एक स्कैल्पिंग एंट्री थी ये। बैल अभी देखते हैं मजीद।
अगर आप चाहें तो अपनी स्क्रीन शेयर कर लें।
नहीं मैं असल में साइड पे हूँ।
अच्छा अच्छा
हाँ जी मेरी स्क्रीन शेयर नहीं होगी इस पे, ये मसला है ना। नहीं तो मैं
तो कुछ पूछ रहे थे लड़के, तो मैंने कहा ये ना हो वो कहें कि ये जानबूझ के नहीं कर रहे, तो वो जरा साइड पर हैं इस वजह से।
H1 करें जी, इनको बताओ। एनालिसिस यही है जी। H1 जो बताए हैं H1 करें जी। हाँ जी
बताइए जी।
ये रेसिस्टेंस है, इधर से सेल है और ये इसका सपोर्ट है, इधर से बाय है। बस सिंपल सा एनालिसिस है इसका। इसमें क्या है, इधर से सेल इधर से बाय। 50-50 पिप लेते जाएं, प्रैक्टिस करते जाएं 50 जब तक दे रही है मार्केट। एक दफा उसने स्टॉप लॉस जरूर हिट करना है, या नीचे का करेगा या ऊपर का करेगा।
Yeah, shock that you're saying it, Casey. What a shock. But anyways, guys.
Else, you know.
Right, guys. Signals.
So we get the sales gone. We get the sales done here. The sales hour, QBC hour.
Number one FX stream. Trades for 5 minutes. Plays Wordle for an hour. All right, yo. What's the game plan? What's the game stand?
Yeah, we need to finish this.
Yeah.
All right.
I'm thinking like movie style action, but it can't be that. We've tried everything. It's not even close.
Someone said hand.
Yeah, hand.
Oh yeah, good shout.
Hand.
Oh.
Foot. Finger.
Nail.
Nail.
Wrist.
Action in hand? Hey, yo.
Hey, yo.
Tool.
Talk? Oh, yeah, talk's a good one.
Hand.
Tool.
Oh, tall.
Tool. Like
oh, tool.
Like a hammer.
See, that's the Atlanta accent. ATL accent.
To right? I don't know.
Hey, it's got to be a hammer then. Hand, tool, name. No.
What's close to a hand?
Hammer. I don't know. ER, I think.
I don't know what
Oh shit, hammer.
Oh my god.
Hammer.
Yo. Remember yesterday I said Algeria?
I was like, what? He's like, Algeria.
I called Wix at 4 a.m. I'm like, yo, you made me say Algeria 3 times yesterday. He's like, what? 12 hours later. Yo, I heard that. Like, is that what you're thinking of right now? Yeah. That's what my brain is processing right now.
Weaver.
Like, bro, it's middle of the night. I'm sleeping.
Oh,
you're
Australia.
Hey, Yanez.
Yanez, where's Yanez at?
My guys are getting absolutely clobbered.
Alright guys, I'm gonna sleep for now because it's too late for me. It's almost 12:30 in the night and I need to wake up at 5 because I could work tomorrow morning. So yeah, I'll see you guys Monday. Hope you have a good night, good morning, good afternoon. Take care of yourselves guys. Don't lose too much, don't risk too much. And for the market, the price is coming down, so as I told you guys, it's really hard to trade on the news. You never know where the price is going. So price went down at first, went all the way to our resistance, came down, well all the way back, it came down again. So there is a possibility that price might reject this area and go up, but I don't want to take this trade because I've already taken my trade. I've made money. I don't want to risk it because today is Friday, the end of the week, and it's always the price are choppy. So yeah, price might reject this area. Price might react to this area and pull back to previous resistance. So yeah, that's how it is. But for me, that's done for the day. So alright guys, thank you so much for being here with me. Yeah, I'm gonna go for now. Good night.